the Monetary Policy Committee, that is MPC, decided by a 5-to-1 majority to keep the policy rate unchanged at 6.5%. Consequently, the standing deposit facility rate remains at 6.25% and the marginal standing facility, that is MSF rate, and the bank rate at 6.75%. The deflation in CPI fuel deepened and core inflation moderated to a 4-year low of 3.8% in December. The decline in core inflation continued to be broad-based, with inflation remaining steady or softening across its constituent groups and subgroups. The inflation trajectory going forward would be shaped by the outlook on food inflation, about which there is considerable uncertainty. CPI inflation, that is consumer price headline inflation, is projected at 5.4% for the current year, that is 23-24. So that is for the current year 23-24, we are projecting CPI inflation at 5.4%, with the fourth quarter, that is the current quarter, projection of 5%. Domestic economic activity remains strong. The first advance estimates placed the real gross domestic product, that is real GDP growth, at 7.3% for 2023-24, that is for the current year, making this the third successive year of growth of above 7%. Going forward, the momentum of economic activity witnessed during the current year, that is 23-24, is expected to continue in the next financial year also, that is in 24-25. The domestic financial system remains resilient with healthy balance sheets of banks and financial institutions. The financial parameters of non-banking financial companies, that is NBFCs, are also improving in tandem with those of the banking system. Good governance, robust risk management, sound compliance culture, and protection of customers' interest are of paramount importance for the safety and stability of the financial institutions as well as that of individual financial institutions. The Reserve Bank lays great emphasis on these aspects. We expect the regulated entities of the Reserve Bank to accord the highest priority to these functions. The next announcement relates to enhancing the robustness of AEPS. Aadhaar-enabled payment systems, that is AEPS, has played an important role in financial inclusion by enabling customers to make digital payment transactions through service providers such as business correspondents. Given their significance, it is proposed to streamline the process for onboarding of AEPS service providers and introduce some additional fraud risk management measures. This measure will further strengthen the security of the AEPS system and enhance its robustness. The next announcement relates to principle-based framework for authentication of digital payment transactions. Over the years, the Reserve Bank has proactively facilitated introduction of various mechanisms such as additional factor of authentication for securing digital payments. While no particular mechanism was specified by the Reserve Bank, SMS-based OTP, that is one-time password, has become very popular. With technological advancements, however, alternative authentication mechanisms have emerged in recent years. Therefore, to facilitate adoption of alternative authentication mechanisms for enhancing the security of digital payments, it is proposed to put in place a principle-based framework for authentication of such transactions.